Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I have a trade idea for you today. August 3rd, 2024. Where has the time gone? And I'm right here in the Batcave in Chicago. But first, as we always do, let's take a quick look at the market. Even the S&P is down 78.50. That's a long time since I've been able to say that. You can see here we've been in a pretty tight range here from around here as a low to where we opened early last night. That's been the high over the last week and a half or so. NASDAQ down 450 and change. NASDAQ kind of getting a little bit weaker here over the last couple of days, a lot more than even the S&Ps. The NASDAQ is a lot weaker than even the S&Ps. Russell down 50 and change, and the Dow down 426. On a percentage basis, the NASDAQ and the Russell are down the most, almost 2.25%. The big story today, volatility up $1.73. That's a big move in volatility. Again, at the upper end of its most recent channel, and it opened down near or closed down near its low end of the channel. So we got a big tug of war going between the bulls and the bears these days. Bonds up 28 ticks. They were below 123. They were over 124. They're sitting right at 124. Remember, as rates go lower, bonds go higher. So maybe those cuts are coming, but they're not helping the market so far with any of that noise. But let's take a look at something I'm going to do a little bit different today. I'm going to take my my cursor. I'm going to go to the high option volume list. I'm going to do what I always do and look at earnings. And there's a lot of compelling stocks here with a lot of IV ranks starting to expand today. But I'm going to give it another little day or two before I go back into these equities, maybe with a broken wing butterfly in SPX, if we can get the market to be a little bit lower and volatility expand a little bit. You can see that IV rank is up almost 2.5%, but still IV rank of 25, relatively low. Monthly implied volatility in the 18-ish handle. If you're looking at any of the options here in SPX. So I'm going to go to something that has a high implied volatility. I guess you could look at USO if you want to. 53 IV rank. You can see the volatility is expanding on the right-hand side exponentially. I don't know if USO makes the high option volume list. It probably doesn't. Let's take a look if it's in here anywhere. No, unfortunately it is not. So I can't check. I guess I could find it in another list. I could find out what the IVX 5-day changes over the last 5 days. I'll look at that in a moment. Let's take a look at /CL. I don't want to go into USO. USO is a little bit too small for me. /CL is a much bigger product. It's 10 times the size of USO, but they're exactly the same. You could see CL has a 53 IV rank. It's down $2.76. USO is doing the same thing, 53 IV rank, down $2.79. There's gaps in USO because it closed at one price and opens at another one. With /CL, it's basically open 24 hours a day, 5 days a week, so you don't get any of those gaps. And we are down near recent lows, actually maybe making lows. So for me, with this volatility expanding, it's time to do a commodities trade in /CL. That is oil. Oil's on its butt. You notice here on the right-hand side of the page, the right-hand middle of this page, these are the different futures that these months and weekly options correspond to. So you'll notice here, this is CLV4. You'll notice here, this is CLX4, which corresponds to this future. That's actually about 80 cents lower than where this CL4 future is. That's what you're looking at here, CL4 here. But I'm not going to look at those. I'm going to look to trade CLX4. So let's put that up in there, /CLX4. It's the same, basically doing the same exact thing. IV rank is just about the same, 53 or so. It's down $2.71, trading under $70 to $69.94. I'm going to trade the 44-day options. We like to put on trades closest to 45 days, 41 to 45 days, and then we take them off when there's around 21 days till expiration. So I'm not going to trade any of these because there's not enough time in those options. You'll notice that the chart is going to look exactly the same or very similar to what I was looking at just a moment ago in the other future. Let's go back to the trade page. I'm going to open up October, And again, we're trading this future because you'll notice that above that is considered this future. You'll notice here 73 days later, we're going to another future. This is contango and backwardation. You'll notice the front month is higher than the back month in oil right now. I'm going to look at October options. I'm going to go to a 1/2 ratio spread. This is very similar to what I do when I'm looking at an SPX trade or something like that, where I'm omnidirectional, slightly bullish in a product. I like to go to be outside, my break even be outside that standard deviation. Now, you'll notice there's 63 options, 62.5, 62, 61.5. I'm going to buy the 63 option one time. $90 is really $900. $90 is really $900. So you'll notice here my max loss is whatever I would pay for this option. Right now it's trading 91. It'd be $910. So 10 times the size of USO. And for that reason, you have to stay small in here. I'm going to buy the 63. I'm going to sell the 61, but I'm going to sell 2 of the 61 options. I was able to do this at 37 cents, which is $370. That brings my break even in oil $2 lower than 61 to 59, plus the 37 cents or 370 bucks, which brings me closer to 58.5, just above that. How did I get that break even on this green line that the computer shows you? Well, if oil were to be at 61 at expiration, 44 days from now, this spread that I'm long one time, being long one of the 63s and short one of the 61s, would be worth $2 or $2,000. So my max profit here is $2,000 plus this $37 or $370, because this is 10 times the size of what you're used to trading in like an SPY or a USO. This is more like SPX, is $2,370. My buying power is $4,600. Now max loss, $58,000. Why? $58,630, because that's my break even on this oil if oil were to go to zero. Oil goes to zero in the next 44 days, that is my risk if I'm not doing anything. Just like if you bought IBM stock at, I'm going to just use a round number of $100, you'd have $10,000 worth of risk. Again, unlikely that oil will go to zero in 44 days, but I guess the numbers are what they are. More importantly, what am I looking to make on this trade? Well, since it is such a large product, and I usually like to make $100, you might think I might want to make, $1,000 on this trade. No, I'm probably using around the same amount of buying power. So all things being equal, I would be looking to make that same $100. You'll notice in a margin account, I usually use $3,000, $4,000, $5,000, $6,000 in buying power. It's the same here. So I'd be looking to buy this back at 27, maybe 2,0.20, which would be 1,500 to $150 to $170 profit. I'm still looking for that $100 as my first inclination on closing this trade. Now, if it happened today, I'd probably close it at 27 very easily. If it happened a week or so from now and oil was acting a little bit differently, and maybe I was a little bit more bullish on oil because we held this number and I decided that I want to stay with this trade, I can make that decision. But I can make that decision when I have a profit, not when I have a loss. Now, if you're watching this and oil has rallied a little bit from when I put this on, you can always go to the follow page. And here you'll see everybody that's made trades today. There's a plethora of trades here. But you can click on Bob the Trader. And you'll notice in oil, I made this trade at 927. Oil now is 69.97. It's 69.85. Really shouldn't have moved this spread that much, but volatility, as you can see, is coming in on this product, helping my spread. It has a 92% probability of success. That's a probability that I make at least 1 penny. I wrote in here 1/2 directional bullish ratio spread. Remember, 0.37 credit is really $370, not $37. You'll also see any adjustments I might make to this trade Or you can see an old Apple trade that I have that's been giving me fits. I'm rolling down the calls in Apple. I collected $1.34. All the trades I do on this podcast will always be in this follow page. So I'm buying one of the 63s, selling two of the 61s. Could do this all as one trade on the Tasty Trade platform. My probability profit is 93, $17 a day in theta decay, big theta decay there. My delta omnidirectional, slightly long, is very small at 0.08. My max profit, which is unreasonable, just like the max loss is unreasonable, because I won't be in this trade or sitting in it, and I don't expect oil to pin at 61, and I don't expect oil to go to zero, where I'd have my max loss. What am I looking to do? I'm looking to make $100 or a little bit more. 100 to 200 bucks would be my target. I'm using $4,600 in buying power. Please remember, I am the world's worst commodity trader, but I sometimes have some luck. That's what it is. Some luck in oil. But you know what else you'd be lucky to do? Bring your account to Tasty Trade, the #1 brokerage firm in the whole galaxy. That's correct. Even in the whole universe. And take advantage of some of the great little benefits we have for moving your account. I think they'll give you up to $4,000 depending on your account size. $4 grand. That's real money.